This is Brian Shaw with Fulcrum Home Loans, here to do your 3 points in under 3 minutes for your weekly market update. Point number 1, purchase applications. There's a national survey done every single week that tracks the number of real estate purchase applications and refinance applications. And this last week, we saw more purchase applications than we have in the whole year, pre-COVID-19, everything. There's a couple things we can take from this. One, that shows that the purchase season is coming. It's a couple months behind, but it's definitely coming, and we need to be prepared for that influx this summer as people start looking for those homes, because it is a little bit delayed. Point number 2, and more importantly, it shows that investor sentiment is still there for real estate. They believe real estate is a safe harbor, that it's not going to go down, and that the recession isn't going to be nearly as hard hit as we initially thought. Investors are the ones that we want to keep our finger on to see where they believe prices are going to go, because at the end of the day, they are the ones that dictate it. So interest rates are low, purchase sentiment's high, applications are high. It looks like it's going to be a really good purchase season this summer. Point number 2, Boise growth is actually looking to go up from COVID-19. There's a couple reasons why. Number 1, companies are going remote. So a lot of companies have had to go remote because of COVID-19, and they're starting to realize that production numbers aren't going down with certain sectors of their companies. Yeah, they need their management in-house, but there are a lot of employees that they can send remote. Their production numbers are just as good, and they don't have to pay for the overhead of keeping them in a building, etc. When people go remote, they can live anywhere in the world. Boise right now is a top 3 place for relocation, a top 5 place for best places to live, and because of that, we're looking to see a lot of people, those remote workers that can work anywhere, start to relocate here, and we'll start to see an influx of those relocation workers, so we need to be prepared for that as well. Point number 3, rates. I want to get a little bit more in depth. Usually I kind of glaze over rates. Right now, interest rates are lower than they've ever been. We've tracked it for over 50 years now, and rates are officially lower than they've ever been in the last 50 years. Normally for refinances, I tell people to do a no-cost refinance. That's where you take a little bit higher interest rate, 0.25%, but the lender will cover all your closing costs for you for that higher interest rate. I do that because if you pay nothing, a year later, if rates were to go down again, we could do another one and we can kind of stair-step it down. Right now, rates are so low that I'm telling people just pay the closing costs, get a rate as low as you can, because this opportunity may not come again. Under 3% for a 30-year mortgage is incredible to think about. So as you're looking to refinance, look at all the options. Don't go necessarily with the cheapest. It may be time to invest in a really good rate for your purchase or your refinance, because you can hang on to this rate forever, and we're at record lows. This is Brian Shaw. Have a good week, and let me know what you think in the comments below. Thanks.